space that has become the forefront of everybody's attention seems to be the sugar space, or call it sugar plus ethanol space, or in as as the MD of Shrinuka Sugars told me earlier, that maybe we should re-Christian the sugar pack as the ethanol pack, simply because that seems to be at the forefront. But keep in mind, while ethanol is the stability story, the spark could still come from sugar, with all the talk around commodity shortages and prices upticks that could happen in agri commodities through the course of the year, possibly the next as well. We thought it best to get somebody in who's been in this industry for a while to talk about how does he see the next 2 or 3 years shape up compared to what the last, let's say, 18 months have been. I'm not trying to compare sugar now versus sugar 12 years ago. Everybody knows that's different. The idea is to try and figure out what could the nature of the next 3-4 years be compared to what the last 18 months have been, which were also different from the last 18 odd years, right? So with that, let me get in Mr. Vijay Banka. He's MD of Dwarikesh Sugars, joins us right now on the show. Mr. Banka, great having you. Hope all is safe.
Thank you so much. Thank you so much. Pleasure being here.
Yeah, likewise, the pleasure having you. Mr. Banka, you've been, in a manner of speaking, at the forefront in setting up distillery capacities as well. You and some of your peers saw this coming. 2 or 3 days ago, Minister Gadkari mentioned that once 100% flex fuel engines are here, the demand for ethanol will go up 10x from 400 crore liters to 4,000 crore liters. So the headlines are really rosy. My question to you is, how is the on-ground situation, sir?
Well, we have seen enthusiastic participation by the sugar mills in setting up ethanol capacities, buoyed by the favorable policies that the government has announced. Ethanol blending has really taken off. 4,000 crore liters, according to me, is a very ambitious number. But yes, initial target, if you recall, Niti Aayog had said that industry should be able to. The ethanol blending should reach at least about 1,000 crore liters by 2025. So sugar companies have very enthusiastically participated in this program. Whatever initial glitches were there, troubles were there, they've all been taken care of. Ethanol lifting is good, and every sugar company is setting up capacities. Of course, there are not so healthy sugar companies. They are perhaps finding it difficult to set up capacities because the banks are a little wary of lending them money. But well, the government has worked out a mechanism of tripartite arrangement where the margin requirements for such sugar mills are lesser. There is an escrow mechanism which has been worked out so that the repayments can be taken care of. So all oil companies and the bankers and the respective sugar companies are participant to this tripartite arrangement. So we will see increased supplies coming already this year. It's 400 crore plus liters already. Contracts have been signed, and I'm sure in the next leg perhaps maybe some more quantity of contract will be signed. So all in all, it's a very encouraging thing. There is increased participation of other business groups to set up grain-based distilleries, those who do not have sugar mills. So yes, we should. I really have no doubt that we can reach about 1,000 crore liters in about 2-3 years time from now. But well, 4,000 crore liters, yes. It requires some radical shift from the way we are presently operating our business.
Yeah, surely. So, okay, let's leave the 4,000 crore number out. But and I know I only invoked it, but let's park that for the time being. Let me ask you about your sense about what are the percentages that you reckon we can reach in the current sugar year and by the next sugar year. And also, I think yesterday or day before, I read the number that we reached about 9.45% blending. Okay. What would it take? Would it take additional supplies and confirmed supplies from sugar-based ethanol and the grain-based ethanol companies to come on stream before these blending targets or the actual blending numbers moving up higher from where they are right now?
Yeah, I think easily in the current ESY, that is ethanol season year, we should be able to achieve about 10% blending. We're already at 9.45, as you mentioned. So we should be able to achieve 10% blending. And yes, in the coming years, next year, we should see this blending percentage going up to at least about 12. So the course correction is happening, and sugar mills are ramping up capacities. There's a lot required to be done by the OMCs also, so as to increase their blending capabilities, the storage capabilities. So everybody is working in close coordination, the oil marketing companies, the food ministry, the petroleum ministry, and the sugar companies.
But Mr. Banka, sorry, my primary question would be that for the blending target to, let's say, move from 10 to 15, would it largely be a factor of supplies coming on stream? Or would it not be necessarily at the hostage of supply because companies are coming up with the supply, but the offtake from OMCs, etc.? What would be the key factor determining
this? It would be both, according to me. The supply also has to be ramped up substantially. So, as I mentioned earlier, there's increased enthusiasm amongst sugar mills as well as non-sugar mills also to set up ethanol capacities.
Yeah.
And the government also has got to ramp up its, the oil marketing companies also have to ramp up their storage capacities, their blending capacities. So it is a combination of both.
Any challenges, Mr. Banka, that you see hypothetically not hypothetically, really, if you see any challenges to your own distillery expansion plans? Because supply chains have gotten disrupted, commodity costs have spiraled out of control, so to say. Are there any issues in you meeting your internal timelines for the said capacity expansion?
No, not at all. Not at all. You see, we are already, we envisage that when our distillery, distillery project, which is under execution, which will go upstream in the month of June of this year. So once it becomes operational, we will be able to supply about 11 crore liters of ethanol to the oil marketing companies. So with the available sugar capacities, we will be fully integrated. Our distillery operations will be optimized and maximized at 11 crore liters. So more capacities can be added only if we ramp up our sugar, cane crushing capabilities.
Are you intending to do that?
No, we will our first objective is to make this distillery operational. So we will take one step at a time. Once this is stabilized, once the operations are stabilized, once we are in a position to supply, the supplies become seamless to the oil marketing companies. Yes, why not? We will we'll consider, we'll look at more opportunities to increase our crushing capacities.
By the way, can I go a bit micro, Mr. Banka? Can you tell us, you mentioned your internal plans. Can you just lay it out with timelines and the numbers as to what is the existing capacity, what does it go up to, and what will the eventual capacity be before you decide to take up further expansion plans under the current announced plans?
Correct. So in this current financial year, let me talk financial year wise. In this financial year, we will supply about 5.4 crore liters of ethanol. So close to 5.5 crore liters of ethanol. So our next plant will be operational. The second plant this existing plant is, of course, continuing to operate. The next plant will be operational in June, end of June, perhaps. So once that is operational, so in the next financial year, of course, we will not get the benefit of the full financial year for the second plant. So we will, in FY 22-23, we should be doing at least about 8 crore liters, and 23-24 onwards, we should do about 11 crore liters.
Okay, and what is the capacity coming on stream timeline as well? I'm just trying to understand. I know you gave me the ethanol numbers, but just the capacities on stream timeline, please.
See, we are already, our existing capacity is 162.5 kiloliters, which is at our Dwarikesh Nagar plant distillery. And the new distillery, which is coming up at Dwarikesh Dham, that will be at 175 KLPD. So our total capacity will be 330 KLPD plus once the new distillery is also operational. So we assume about 325 days of working for both the distilleries. So we should easily be able to do about 11 crore liters.
Okay, so 11 crore liters by end of FY23. Is that a fair assumption?
23-24. 22-23, we will not get the benefit of expanded capacity for the full year.
Okay,
so 23-24, we will have both the plants working at their full capacities.
Got it. And the sugar
and
capacity?
throughout the year. And
Sorry,
throughout the year.
got it. And the sugar capacity at about 21,500 tons crushed per day, or am I wrong?
Yeah, absolutely. 21,500.
Okay. And Mr. Banka, just thinking of it as a prudent businessman that you are, would you decide on capacity expansions for either sugar or distillery or both only once both the capacities are operational, which means only post FY 23-24? Is that a fair assumption?
Yes. No. See, our distillery plant, the second plant, is going to be operational in June. So, we will, of course, our first priority is to make it operational. And once it's operational and it's doing fine, then we will take the next step. So, additional distillery capacity cannot be created with our existing sugarcane crushing capabilities. So, if we want to increase our distillery capacities, then of course we need to increase our sugar crushing capacity. See, there is another option available, but it wouldn't be a very prudent option in the sense that you can add more distillery capacity and cut down on your sugar production, but that will not be a very viable proposition.
And you wouldn't foresee, as a sugar company, you don't foresee the possibility of doing a grain-based distillery any fashion whatsoever?
No, we are not. As of now, we are not.
Okay. Okay. So I reckon, and one more question would be, I mean, there is some bit of debt on your books, unless I'm very wrong compared to others. My question to you would be, would you choose to do any kind of further expansion through use of the internal cash flows from the ethanol operations and the sugar operations, or would you be happy to, looking at the current business environment, expand distillery and sugar capacity through use of debt as well?
See, whatever debt that you are seeing on our books, particularly the long-term debt, it is all at subsidized rate of interest. So the government has there is one debt which was extended to us by the state government of Uttar Pradesh, which is at 5% rate of interest. The second one is for the distillery that we have put up at Dwarikesh Nagar plant. And the third debt is for the distillery, which we are putting up at Dwarikesh Dham plant. So all these debts are at subsidized rate of interest. And working capital debt, of course, is depends on the sugar stock that we are carrying. But I must mention here that between last year and now, our working capital cycle has been compressed because we have cut down on our sugar production. We are doing more ethanol, where the turnover, the cash flows are a lot more better.
Sure. Is that the reason why the street is also slightly bullish on this cycle being the new normal and better operational metrics from you as well? I mean, one of the assumptions that I was reading said that for FY23, your margins could be about 15%. For FY24, they could move up to 19% EBITDA margins as well. Safe assumptions, Mr. Banka?
No, we will have to wait and see. I think it's too far a thing to be looked into. Yes, analysts do their job, but yes, we think this with the compression of the working capital cycle, with faster optimized stock holding of sugar as well, and across the country with sugar stocks levels being moderated and sugar prices getting better, so things should get better from here on. See, two things. Number one, with the moderation in the sugar stock across the country, last year it was 8+ million tons, and this year we expect it to be about 7 million tons, which roughly is about 3 months of consumption, 3 to 3.5 months of consumption. So with that happening, the sugar prices should also get better. Of course, sugar price, there is a dire need of sugar prices getting better because our costs have gone up this year because the SAP of the sugarcane has been increased. So, but anyways, sugar prices should get better. So all in all, with sugar segment doing good and distillery segment doing good, things should get better from here on.
Okay, and I was going to ask you about sugar. Could there be a delta effect of sorts because of higher sugar prices? There is a commodity price disruption underway across, and while it may get course correct, hopefully sooner, with the conflict hopefully ending sooner, cross fingers for that. But is there a big jump in sugar realizations and sugar segment margins for you in store in Q4 and maybe the next couple of quarters?
See, Q4, already we are at the fag end of the Q4. So there's not much that is expected to happen. But yes, in the coming quarter, sugar prices should get better. Now, there are two factors. For example, you talked about sugar internationally, sugar prices going up, the oil prices going up. Yes, international prices have been good, which is the reason why India has been able to push out a lot of sugar by way of exports in this year. And it is expected that we should do 7.5 million tons of export. And the remarkable thing about this export is that it is all without any subsidy. So, which means that India can compete very well with other countries insofar as export market is concerned. Domestically, there is enough sugar in the system, so there cannot be runaway increase in the price of sugar domestically. But yes, the sugar prices level should get better and get better to a level where no one is fretting. Neither the industry is fretting nor the consumers are fretting. So they should be at a reasonable level where sugar mill should be able to earn decent amount of money from the sugar sector. Is
the industry fretting right now, sir, with the current price?
No, it's not fretting. It's not fretting right now. But yes, let me take you back to 2016-17 when the sugar prices were at 3,600, 3,700 levels per quintal. But we have seen, we have not seen prices going to those levels. And even at those levels, there was nobody was fretting at that point in time, neither the government nor the consumers nor the sugar mills. We haven't reached those levels. So we hope that we get back to those levels. But like I said, since there is adequate stock in the system, there cannot be runaway increase in the price.
Got it. Mr. Banka, one final question. I know these days to talk about 3 years out is too long a time frame because one doesn't quite know. But I'm still wondering, I'm still tempted to ask you, would you believe just looking at the intent of the current government for flexi fuel, for ethanol, and the stability that segment brings to the fortunes of sugar companies, do you envisage that Dwarikesh itself, in terms of capacities, both sugar and ethanol combined, could be 5 years out a materially different looking company than what it is currently or what it will be at the end of FY23? Is that a possibility? Materially different?
See, you very rightly pointed out that the 3-year scenario is a long enough scenario for anybody to visualize. Things have changed dramatically, and it's a very dynamic situation that we are living in. The government has been very encouraging in, pushing, accelerating the ethanol blending program, and so are the sugar mills. So we do see big changes happening in the next 5 years, hopefully all for the good of the industry.
Okay, Mr. Banka, it would be lovely to talk to you post your numbers because that's when we'll get a feel of how you've done for the quarter and for the year. So we look forward to talking to that as well. And thank you so much for talking to us today.
My pleasure. Entirely my pleasure. Thank you so much.
Thanks for tuning in.
Thank you.